And in the chat room, if you guys were here when I posted it, there is a reminder that actually the campus is closed Friday to Monday. So because of the campus holiday from Friday to Monday, the tutors are not supposed to put hours in for that day. So make sure you attempt your homework sooner than later. I don't really do holidays myself, but I don't have to put in a time card like they do either. So I'll still be around if you get stuck, but let's try reaching out to them first. That means that you should try your homework sooner in the week because the campus does have a holiday from Friday to Monday. That means no class on Monday. So let me go ahead and put that in the chat room. No class on Monday. There's no lecture on Monday. Any questions on that before we get started? Okay, then if we don't have questions, let's make sure we mute ourselves so that we don't hear background noise. Thank you. And I'm going to share my screen. And of course, you guys are free to unmute yourself at any time that you do have a question. So here's our schedule. I don't want the upcoming test to throw anybody, off as far as dates go. So we are finishing up chapter 5 today. You'll see Monday is a holiday. You'll notice that we're only spending one day on chapter 6 because there's not a whole lot in it. You guys have this mini case that you're going to spend the class days working on. And let me tell you what the mini case is all about. I think it's 20 points, although I need to go look at the syllabus to be sure. And the mini case is the accounting cycle from start to finish for a small service-oriented business, which means you're going to be performing all of the accounting cycle steps. And there's check figures, and I'm hoping, I haven't verified this yet with them, but I'm hoping that the tutors will be able to be in their Zoom rooms for that week during class time. I don't really believe there's any reason to actually come to class on those days if we can get the test review done when we talk about chapter 6. So I'll verify that with the tutors, but that is a problem that because it's worth 20 points, it takes a while to do. It's not something you want to wait until Sunday night to start. So we'll spend the week reviewing for the test and doing that mini case, which is also a great review. And then everybody make sure that you have this date down in your planners or your calendars. For me, it's my cell phone is my calendar. So make sure March 7th is marked down as the day of the test. And you should be preparing yourself all along, which means you should be doing the mini cases as you go. In fact, I would encourage you guys to do the SMART book as you prepare for each chapter. That way you're not overwhelmed and stressed out when it comes the night before the exam. And I'm very open to sharing study habits with you if anybody wants to come into my office hour or make an appointment. There's lots of strategies that we can put into place, individual strategies depending on your strength and your weaknesses. And I'm happy to talk about any of that in my office hour. Okay, here's our agenda for today. This is day 2 of the worksheet. So we've been talking about the adjusting process. And we said we know that internally there are certain accounts that we know are wrong. They're not up to date. And so these are adjustments that we're making because we know certain accounts are inaccurate. We learned 3 of them last time. We learned that supplies needs to be adjusted to figure out the amount used up. And we've seen that the author goes back and forth with how he words that. Sometimes he'll tell you how much is on hand and we have to calculate the adjustment. And other times he'll just say, hey, this is how much we used up. And the amount's just explicit and it's given to you. So we learned about supplies. We learned that all prepaids need to be evaluated at the month end or the year end, depending on the period of time you're looking at, to make sure that they really do have value to them. And I gave you an example of my son going into the Marines where all of a sudden, my prepaid was definitely wrong. I needed to adjust that because I didn't need the coverage that he had. I have been in a doctor's office with him, watching him tear up because his accountant made a mistake and forgot to record the prepaid liability insurance that he pays. They forgot to record how much has been used up. And so that doctor, and I'll bring this story up again when we do the first exercise, this doctor was paying out profit sharing bonuses based on net income. And what we found out was the net income was wrong because they hadn't recorded over $100,000 of premium payments that were actually used up and had no more value. And remember what had happened. He had paid his bonuses based on the wrong net income. So you could see why he was crying. That was a somber adjustment to come in and have to see. You can't go around to people after you've given them a bonus and say, hey, by the way, can I have it back? I made a mistake. You know, most people have spent the money by that time. And then the last adjustment that we learned, probably the one that causes the biggest headache, is depreciation. And we said for accounting purposes, okay, this is not how the world views depreciation, but for accounting purposes, it's the loss of usefulness, meaning that all assets that we use, except for land, we haven't talked about that yet, but all assets that we have get used up. In the process of just the ordinary course of business, I'm using this computer. And so the cost of this computer can't stay on the balance sheet forever. It needs to be systematically put on the income statement as we use up our assets. Now, I mentioned something, and this might be a note to write down in your notes. Land is not depreciated. Okay, why? I hate to even say this, but if this house that I'm sitting in, my home office, if this burned down tomorrow, the land has not lost its usefulness. The land will just be built up on again. So land is in perpetuity. We don't make adjustments for depreciation on land because it does not lose its usefulness. Okay, we learned that all adjustments had a few characteristics. We said that all adjustments affect an income statement account and a balance sheet account. So an income statement account and a balance sheet account. Therefore, if we mess it up, or if you want me to talk like a professor, if we make a computational miscalculation or we misappropriate costs, right? Those are big words that I choose not to use when I lecture to you guys. If that happens, then all three financial statements are going to be wrong. And you're going to see an example of that today. Why would all three of them be wrong? Because there's an income statement part and there's a balance sheet part. So if you miss the income statement portion, your expenses are going to be wrong, which means your net income is going to be wrong, which net income flows into capital. So capital is going to be wrong. And whatever asset you didn't adjust properly is going to be wrong. So adjustments have far-reaching implications if they're done incorrectly. Characteristics of adjusting journal entries. I think we've already covered that just in that short little lecture. And then introduction to the worksheet. So today, basically, more practice. And not only are we going to do one more worksheet because we kind of rushed it toward the end last time, but we're going to learn how to take that worksheet and to prepare financial statements from them. The good news is you guys know how to prepare financial statements. You know there are three of them. You know they have to be done in a specific order. And you know that revenues and expenses go on the income statement, and you know that capital is adjusted on the statement of owner's equity, and you know that the balance sheet is a snapshot of what the business looks like at any point in time, and we're going to prove that the accounting equation is in balance. So the good news is today is almost all practice. We've covered the bulk of the chapter before. We're going to review these financial statements. That's where we're headed. Any questions on that agenda or anything that you don't see on there and you tried to work out the homework and had trouble? Okay, then I think let's go to this PowerPoint to kind of recap where we've been. We know that we're working through this accounting cycle. And I'm not going to ask you, for example, I wouldn't ask you what's step 5 in the accounting cycle, but I would expect you to know by now that we need to journalize transactions first, and then we need to post them to get the balances up to date. And now we're learning that the worksheet is an internal tool used to pull together all of the data for a company and give the owner a preview of what his financial statements are going to look like. You're going to see me do that again today. And once the worksheet has the blessing of the owner and the accountants and so forth, Then you're ready to do the formal financial statements. Okay. And same thing, same three that we've learned before: income statement, statement of owner's equity, and balance sheet. However, our balance sheet, we need to switch up a little bit the way that we're going to present those plant assets, those long-lived assets that we're depreciating, because there's a requirement in there that GAAP says that we show something. So I'll show you that. And then eventually we're going to record the adjusting entries. Just because we have them on that worksheet, that doesn't get them into the accounting system. We still need to go through the journal entry process for those adjusting entries, writing in the proper debit and credit. And then the rest of these steps are going to be in chapter 6. So what's going to happen at the end of chapter 6, you're going to know, and I can't tell you how amazing this is, that in the few short weeks we've been together, I don't even know if it's 5 or 6, but by the time we finish chapter 6, you'll be able to do the books for a small service-oriented business. And there's value in that. You guys will now have new job skills that you can go out there and think about getting an accounting clerical position to be able to do that. And then you're going to get a little bit of practice about what real accountants do, because you're going to be asked to do that mini case problem that you saw on the syllabus at the start of class, or on the schedule of activities at the start of class. And that's going to put these skill sets to paper. In fact, if we were on campus, I would be taking you across the way to the computer room, and I would be forcing you to use QuickBooks so that I could demonstrate a software package to you, and so that you guys wouldn't have to go through all the mechanics of adding things up. Unfortunately, we won't quite be on campus soon enough to take advantage of that. But anyone that's interested in learning how to do QuickBooks, maybe on the second accounting cycle problem, if we're on campus, I certainly hope we're on campus by then, we'll go into the computer room, those of you that want to, and you can learn how to use a computerized program called QuickBooks. In fact, if you guys are interested, we offer QuickBooks classes, which can increase your job skills significantly. If you can learn how to use a state-of-the-art software package that has a fairly reasonable cost that lots of small businesses use out there, there is value in that. In fact, that's how I paid my way through school, was once I learned how to use the software package. And it wasn't QuickBooks. This was before QuickBooks existed. It was called DAC Easy. Once I learned how to use that software package, I was able to keep the books for small to medium-sized businesses during my studying hours, and I could bill out to do that. We have a class, if anyone's interested, called Accounting 60, Accounting 60. And it's a QuickBook class, and it immediately builds your resume. Highly recommend it. So that's what we're doing. We're walking ourselves through the steps of the accounting cycle in this class. Any questions on that? Okay, then the learning objectives in this chapter. We know how to do a trial balance. We've calculated 3 adjustments, and we're still working on that. We have completed 1 worksheet. We're going to do another one today. After that worksheet is prepared, we'll be preparing ourselves to do those same 3 financial statements that we've done in a previous chapter. The only difference is going to be the balance sheet is going to be a little bit different now that we've started depreciating assets. Eventually, you need to get those 3 adjustments into the system. And of course, there's new terms in every chapter. So I hope you're spending at least 5 to 10 minutes each week looking at the terms and definitions in your chapter. That also makes studying time the night before the exam much less stressful if you learn the terms as you go. And also, that's when you can come into my office or Sandra or Giselle's Zoom room and ask them any questions. Ask them, hey, I don't understand this term. What exactly does that mean? That's why we're here. And here's kind of a mock-up worksheet. And here's what we learned. We learned that this trial balance here that I'm circling in red is the same trial balance that we've been using since chapter 3. So that's not the new part. We're putting it on this new document now as a starting point. And then we learned that the other columns are mathematical columns so that we can extend balances out. You're going to see that today. Last time we focused on 3 adjustments. Okay, and I'll write them up here, but I'm sure they'll be on another handout. We focused on supplies, we focused on prepaids, all prepaids, and we focused on depreciation, or the cost of using up assets, supplies, prepaids, and depreciation. So once we had that starting trial balance, which we're all comfortable with already, the next step was dropping in these adjustments and then always ensuring that the debits equal the credits. We did this last time. And then we learned that the adjusted trial balance is just horizontal math. It's taking whatever balance is over here and footing it across, what we call cross footing. That's all it is. So we got to be really careful that we drop our numbers into the appropriate column. And once we got that adjusted trial balance done and we've ensured that debits equaled the credits, now it's just a matter of dropping the number in either the income statement or the balance sheet, but never both. And so last time near the end of class, when you were getting kind of tired and there was a lot of numbers going around, we said that the only thing that goes on the income statement are revenues and expenses. And that by default, if something's not a revenue or expense, it's going to show up on the balance sheet. I'll call that all else or everything else. So that's an overview of what we did last time. We're going to jump in today and do some more. But any questions on the process or the logistics, maybe is a better word, of completing a worksheet? This is one of those chapters where I hate getting emails. Well, I never hate getting emails from students because that's my job. That's why I'm here. The emails I hate hearing, though, are the, I've spent 2 hours and I cannot find my error. I've been looking for this error for 2 hours. We don't want you getting stressed out. We don't want you pulling your hair out. I'll be more than happy to look up on Connect and see where exactly your error is. But you have to reach out and ask for that help. And if you do it Sunday night at 11 o'clock, there's no way you're going to get help because I'm not up at that time. So that's why, again, start these problems early in the week, identify where you may be having problems, and then visit the tutors or visit myself if I can help you in any way. So any questions on that process of that worksheet? Okay, this next one just kind of shows you that there's really only 4 new accounts that we've learned about in this chapter. And I think sometimes students get so overwhelmed with having 10 columns of numbers that they forget to see the forest through the trees. The big picture is we know there's 3 accounts that need to be adjusted. We know there's certain accounts in our records that are not at correct amounts. One thing that bugs me on this slide, I just noticed, they didn't circle the prepaid. Okay, any prepaid needs to be looked at the end of a month or the end of the year to see if it still has the value to it. So although prepaid's not a new account, we need to look at what's in there because typically an adjustment needs to be made. And then we also need to take a look at supplies and figure out how much has been used up. And the same holds true for any type of a plant asset or a long-lived, depending on who you talk to, asset. Any assets that we have that are above a certain amount, and that amount varies with different companies, and are going to last longer than a year, need to be depreciated, right? So I'm looking around me. The computer needs to be depreciated. The chair I'm sitting in needs to be depreciated. The printer over here needs to be depreciated because they all lose their usefulness over time. And so that's what the worksheet is intended to do, to internally adjust those accounts that we know are not correct and up to date. Okay, so the supplies adjustment, you guys have access to all these PowerPoints. I've just selected a few of them. The supplies adjustment, we take a look at what's in our GL now. In this case, this guy had 1,500 sitting in his general ledger. But when he went to look at his supply cabinet, he noticed that there was only $1,000 left. Sometimes your author calls that on hand. I'm going to write that in there. And sometimes he calls it in inventory. I'm writing kind of upside down, so I apologize. What we need to know for all of these items, for all these adjustments, I gave you a magic question. And the magic question was, how much has been used up? That's what you want to ask yourself on all of these adjustments. How much has been used up? Well, in this case, if there's $1,500 in the supply account, but you only have $1,000 on hand, the difference between those two is how much has been used up. So we would have supplies go down and supplies expense go up. And what happens if we don't make these journal entries, when we don't make these adjustments, you're going to see that the income statement's wrong, which makes the statement of owner's equity wrong. And the asset supplies in this case would be overstated if we don't make the adjustment. So how often do you have to make the supplies adjustment? People ask me that all the time. It depends on how much you spend on supplies, right? If you have a small business and all they do is spend $100 on supplies for the year, it's not going to kill you if you wait till the end of the year to do an adjustment. But if you're someone who does a lot of work in the office and you're going through the supplies right and left, you may want to make this more often. Here's the one that I've seen the doctor cry over. In fact, I've cried over this one myself, because the more assets you guys acquire, the more insurance policies you'll have to have. I think I counted last year, I think it was, I have 8 personal insurance policies. That's crazy. But we pay a ton in insurance, and oftentimes we pay for it ahead of time to get a cheaper rate. And so if you forget this, this is what the doctor was talking about. He was talking about his malpractice insurance, over $100,000 a year, which had not been adjusted because the accountant went out on maternity leave. When he came back, he forgot about it, was going off statements that she had made prior to her leaving, and all of a sudden was paying profit sharing bonuses out on a wrong net income. That wrong net income would happen with any of these 3 adjustments that we're talking about today. So with prepaids, you saw us do this last time and we'll do it again today. We look and see how much is in the prepaid. In this case, there was 2 months paid for rent and one of the months had expired. So in this case, the magic question, how much has been used up? In this case, it was $4,000. And then we also learned about depreciation. We said depreciation is a loss of usefulness. And I could give you a GAAP definition, but it would probably confuse you. What GAAP says, it's the systematic allocation of cost over a reasonable period of time. And I told you that there's probably about 20 different depreciation methods. We're learning one. And the one that we're learning is called straight line. And I think the next slide kind of recaps that for you. So, oops, I lost it. Here's the formula. I hope this is in your notes. We're going to calculate straight line depreciation by taking the cost minus the salvage value on the top. And if you guys are doing this on your calculator, you got to do the top part first. If you try and just punch the numbers in your calculator and you don't do that numerator first, you're going to get a wrong answer. I just saw a bunch of my Excel students do it wrong. Okay, so cost minus salvage value divided by the life. If you're doing monthly depreciation, that bottom number would be the number of months. If you're doing yearly depreciation, you could do the number of years on the bottom. So they gave you an example of how to calculate it. So in this case, there was an $11,000 asset that was going to last for 5 years, which is the equivalent of 60 months. This one has no salvage value. So they took 11,000 over 60 and they got the answer of 183. That would be for 1 month of depreciation. So every month they would record that adjustment until that asset was used up. I think that's probably most of what I wanted to show you. I did want to show you this. We learned about this new funky account, right? And anytime we learn about contra accounts, students typically miss them. So all assets have a normal debit balance. And we are learning now about a new contra account called accumulated depreciation. This is the only asset that you've learned so far that will have a credit balance. And its purpose is to accumulate the depreciation of the asset until eventually you wind up with a 0 net asset value. In our case, in that example that we did, this equipment's cost would never be touched instead will keep accumulating that $183 in this account until the asset is fully used up. And I mentioned earlier that one of the things we're gonna have to be careful of today is on the balance sheet, GAAP says we need to show 3 items. So I'm gonna highlight this. We haven't had to worry about this before. GAAP says that when you have depreciable assets, what your book will term plant assets, you now need to show 3 things on the balance sheet. You need to show the cost. You need to show the accumulated depreciation, which is how much you've been accumulating in the depreciation. And the third thing you need to show is the book value, the difference between the 3. So you're going to see on the balance sheet today, we need to tweak it a little bit to make sure that we get those 3 items in there. GAAP says you have to show this either on the face of the balance sheet or in the notes to the financial statements, which you guys will learn about in a later accounting class. I think that's a pretty good summary. I think you guys probably remember what an income statement looks like. So once we do our worksheet, we'll be doing this income statement. I don't like to call it new because you're used to doing it. We'll be doing a formal statement of owner's equity. There's an example of one. And then we'll be doing this balance sheet. And when I looked at this balance sheet, I went, oh my gosh, this is a terrible slide. They don't, first of all, they don't have the amount of equipment down there. And this number here is in the wrong spot. So I need to let the author know that that slide is really screwed up. Let's see if they do a little better job here. Here it is. On that plant asset, you have to show 3 things. That asset cost $11,000. That was one. This asset is a new asset. How do I know that? There's only $183 of depreciation on it. And so there's its book value, 10,000, I think that says 817. So we've got to do a little bit of a tweak to our balance sheet. Other than that, we are ready to jump in and get our hands dirty. After that review and review the agenda, review the PowerPoints, kind of what we covered last time, we're in and ready to do a worksheet because as you guys know, those worksheets take some time to do. That's why you only see a couple of questions for today. Let me stop. I've been talking a long time. You guys must have questions after that.
Professor?
Yes.
I'm not sure if this question was answered when you were speaking, but Eduardo asked if you can sue your accountant if they make a mistake.
It depends if it's considered grossly negligent. So in that case that we're talking about, somebody going on maternity leave and the owner knows she's going on maternity leave, that was negligence on his part for not getting an accountant in there to take her place. So accountants definitely can be sued. If you're wondering about that, go read the Wall Street Journal. They're getting sued every day. In fact, the Enron scandal, I know you guys have probably heard about Enron, brought one of the big 4 accounting firms, big 5 at the time, to its knees and caused them to cease and desist. So accountants can definitely get sued, but it needs to be over negligence or an intentional act to hide information, which was not the case in the story that I just told you about. Great question. Anybody else? All right, let's jump into our Excel spreadsheets that hopefully you've downloaded. And I'm going to go to the first exercise, which is 5-4. And this one I put in here because I know there are questions on the exam about the effect of errors. And I'll tell you this, I'm 57 years old. As long as I'm a CPA, I will continue taking classes. I have to. And still at this point in my life, the hardest thing for me to deal with in my classes is determining the effect of errors all the way through the financial records. So errors tend to trip students up because it causes us to have to utilize our critical thinking skills. So let's read through this one, and this will be a great problem that illustrates the effect of errors. So someplace in your notes, I would write down that there will be questions on errors on the exam. So this one might be one that you try again. So this one says, assume that a firm reports net income of 135,000 prior to making adjustments. Okay, I'm going to write that down. Net income prior to adjustments, they just told us, was 135,000. Okay, and I'm going to make this appear a little bit nicer on your screen by hitting select all. I'm going to hit the comma format right here in the middle. It'll just make your numbers look a little nicer. So that's easier to read. Okay, it says prior to making adjustments for the following items. Okay, they have three things that they need to adjust. Expired rent. Okay, in other words, that's sitting in a prepaid and they probably need to record it, of 10,500. The next item they talk about is depreciation expense of 12,300. And supplies used up. So the same three adjustments that we've been talking about in our last class meeting are mentioned here. So assume that they report 135,000 prior to making these three adjustments. Here's what the question says. Assume that the adjusting entries have not been made. In other words, they have omitted them. Either, it could be they've just forgot or somebody went on maternity leave. And so the adjustments didn't get posted like they should have been. The question is, what effect do these errors have on the reported net income? Okay, well, think about it. These are unrecorded expenses, all three of these. All three of these affected an expense. Rent expense on the first one, depreciation expense on the second one, and supplies expense on the third one. When you have unrecorded expenses, I'm going to put that word in here so you have it in your notes. When you have unrecorded expenses, it means that this net income is too high. And this is where the doctor went wrong. He made the mistake of paying his profit sharing bonuses out before some significant adjustments were made. Well, that would have made his net income lower because all three of these charge an expense account. How much lower? Well, let's go sum those three up. I'm going to sum those three up by using the equal sum function. I'm going to add those three up by 28,200. So the net income wasn't 135,000. If the adjustments would have been made properly, his net income should have been the difference between those two. So not only am I going to leave you with this by saying that the net income was 28,200 overstated, I'm going to run this through the financial statements, right? Because it's not just the net income that's overstated. You see that the net income was too high by 28,200. It should have been 106,800. So let's run through the financial statements. Okay, first thing, our expenses were too low by 28,200. Okay, we saw that right here. That means our net income was overstated or too high by that same amount. Okay, think about what happens. What happens after we do the income statement? That flows into the statement of owner's equity. So now our ending capital is overstated. Let me think about that. Net income we said was overstated. So ending capital is also overstated by the same amount. And now when you get to the balance sheet, remember our accounting equation. Our accounting equation says, I'm just going to draw this because it's easier. Assets equals liabilities plus owner's equity. Okay, well, these three assets, okay, what would those assets be? The prepaids, whatever the prepaid is, the equipment or whatever asset is, and the supplies. Those three assets are too high. So you have three assets that are overstated by 28,200. There are no liabilities in that equation. I mean, as far as we didn't use any liability accounts, and the capital here is overstated. So adjustment errors mess up all three financial statements. And so we have a pretty complete picture after that exercise as to what is wrong. That's not a cut and dry concept. It assumes that you understand how the financial statements flow. And so errors typically cause students, myself included, it can cause us to miss test questions if we can't critically think through what's going on. So any questions on that exercise? Or Sandra, do you see anything else in the chat room I need to address?
No, I don't see anything right now.
Okay. Yeah.
Professor, I was wondering if you could explain again how the expenses were too low.
Yes. Yes. So if we don't make these adjusting entries, it says assume that the required adjusting entries have not been made. That means that we don't have any depreciation on my computer or equipment because we forgot. And we haven't adjusted our supplies account because we forgot. So our supplies account is still way up high. We haven't recorded the supplies expense. So that's why the expenses are too low, because we forgot to record them. And each one of these three adjustments involves an expense.
Oh, okay.
Make sense?
Yes.
Okay, great question. Anybody else? Because this is a section where you're likely to make a mistake thinking through the errors. All right, then let's go try a worksheet. We realize how long they take by trying one last class period. So I did this in separate sections. I put the problem wording so you wouldn't have to get your book out and be flipping back and forth here. So we'll read it. And then I created an Excel worksheet on the next page so that we could do it together. Okay, so let's look at the wording. It says Christopher Foster owns estate planning and investments. The trial balance is as of June 30th. So first thing I want you to notice, this trial balance is the same trial balance we've been using. It just has more accounts on it because we've been learning about new accounts. And the next thing I want you to focus on is what period of time is our worksheet covering? Okay, well, this is for a month. So take a look at that third line of the heading. That's for the month ended. Okay, and then let's keep reading. We know there's going to be some internal adjustments that need to be made. So the instructions say complete the worksheet, prepare a set of financial statements, and they let us know that the owner hasn't made any investments. And then they want us, I think Johan or somebody had a question about how do you journalize and post the adjusting entries. We haven't been able to do that yet. Hopefully we'll be able to do it on this problem. And they gave us these 4 adjustments. Okay, supplies, a prepaid, some rent that had expired, and depreciation. So in the interest of not having to float screens back and forth, I put in problem 5-4B on the worksheet and I snipped that information right before class started. I attempted to put that visual here in the chat room, but you only would have seen it if you came in early. So let me stop for a second and see if I can put it in the chat room again so that anybody that wants to put it on their screen can do that. So give me 1 second. Let me get in this chat room. Let me post this file, if I can find it real quick. I'm sure you guys don't want to see all my pictures. Here it is. Let me put it in that chat room. So it's in there now. If you want to go download in the chat room, that little visual, then you can also put it on your screen as well. So let me go share my screen again. I have it up here. You guys can grab it if you want it. Even if you don't want, you can just follow me here. So here we go. Step 1, let's complete this worksheet. So letter A says the supplies were purchased on June 1st. Okay, remember our worksheet is as of June 30th. So I want to go take a look. I'll put it in yellow so your eyes will focus on it. Right now, what's sitting in supplies is 30,400. The magic question on all of these is how much has been used up. Okay, well, he didn't tell us. He told us how much is left. So I'm going to go out to the side and make a T account just for our ease of understanding. There was 30,400 sitting in this supplies account. And what he just told us, he didn't tell us, he tried to trick us. He didn't tell us what was used up. Instead, he chose to show how much was on hand. And so what we need to do as accounting students, knowing what this worksheet is all about, we have to answer the question, how much has been used up? And so you take the difference between what's in the general ledger and what should be in the general ledger. I'm going to subtract those two amounts and I'm going to come up with 18,400. That's the answer to how much has been used up. So let me stop for a second, see if anybody has any questions on how we came up with 18,400. And if not, I'll go drop it in my worksheet. Any questions? Okay, then let's go back here. Did I hear a question? Sorry. Okay, then let's go in here and make our supplies go down. So I'm going to put a skinny little letter A in the skinny column. And I'm going to put in the amount used up that we just computed as 18,400. That's going to bring my supplies down. And every single one of these adjustments involves an expense. This one happened to involve supplies expense. So let me also make this yellow so you see where it came from. We need to record the supplies used up to the supplies expense account. That's letter A. Remember what this worksheet is. It's an internal tool. That means it stays in-house. It's an internal tool used to gather together all of the adjustment data so that you can project out to your owner what his or her financial statements is going to look like prior to doing those formal financial documents. So any questions on letter A? And Sandra, you got the chat room. It's completely gone on my vision. Okay, letter B, the prepaid advertising. Let me go find that in a different color. And remember, Sandra is going to post her files afterwards. So if you would rather just listen and watch, don't get so involved with recording it that you forget what it is you're doing. Sandra is going to post her files at the end so that you can go have a clean file to work off of if you need it. Letter B says prepaid advertising was signed on June 1st, and it covers a 4-month period. So remember the date of this worksheet, it's covered up because of my snip there, but the date of the worksheet was June 30th. So what that means is 1 out of 4 months have been used up. So I need to take 1/4 of the amount that's in there and get rid of it. So my calculation I'm going to do right on Excel. I'm going to do 1 out of 4 months is used up. And I'll take that 1/4 and I'll multiply it by the 57,600. Let me leave that amount or that calculation up there. They told me that that prepaid advertising, that green number there, was for 4 months. And because June is now gone, June represents 1 out of those 4 months. When I pop that into my calculator, I'm going to get 14,400. So my prepaid advertising has lost value. So I take it out of prepaid advertising and I'm going to put it into some kind of an expense. Well, what makes sense for a prepaid advertising contract is advertising expense for 14,400. Let me make that green so you can see how they match up. Our goal on the worksheet is to gather together the internal adjustment data that it's going to take to get our accounts to be accurate. We know that we have a problem because we don't just keep upping our supplies account. We don't just never go into the supply cabinet. So we know that if we have supplies, some of them have been used up. We had to compute how much. If we have any prepaids, chances are they've been used up. So we need to address them. We've looked at prepaid advertising. I think next we're going to take a look at the rent account. And we know that if we have any long-lived assets like property, plant, equipment, cars, any large item that lasts more than a year, we are using them up. And so we're going to have to depreciate them using straight line depreciation. And that's what we're in the process of doing right now. So let me stop. Any questions on A or B or anything else? All right, let's attack letter C. Rent of 12,000 expired. Okay, why would he tell me that? If he just put it to rent expense, he wouldn't have had to tell me that. But now he's making me think I might have some prepaid. So I go to the asset section and lo and behold, here is a prepaid rent account. Okay, so I'm looking at that prepaid rent and he tells me that 12,000 has expired. Okay, this dude, it looks like paid for a whole year's worth of rent up front. You can get huge rent discounts by doing that, by the way. Most people don't have the money to do it, but he's used up 12,000. Okay, so let me take 12,000 out of the asset and put it into the expense. What kind of expense? Well, if it was for prepaid rent, that would properly be charged to rent expense. And then letter D is going to address, and this can also, I've seen this also affect companies negatively when they forgot to do the depreciation. Depreciation is computed using the straight line method, one of many methods, but we're only using one. The equipment has an estimated life of 5 years and no salvage value. Okay, again, we are doing this for 1 month. So I'm looking at this equipment here, and I see that there hasn't been any depreciation taken yet. And my worksheet says for the month ended. So I need to compute this. Let me put letter D in here. We know that we learned about this funky contra account called accumulated depreciation. So we can go to either the expense account, I'll make that pink as well, or we can use the accumulated depreciation, doesn't matter because it's going to affect both. But here's my formula. The cost, 192,000 minus the salvage value, they told me was 0. I need to take that whole thing. I know 0 doesn't have any implications, so I'm giving you good practice. You always want to remember to take out that salvage value. And then we want to divide it, since we're doing a monthly depreciation here, not by 5, because that would give you the annual depreciation, but by 60. Because if you have a 5-year asset, and there's 12 months in the year, that's 60 months that you plan on holding that asset. So when I do that, you guys can do it on your calculator, I get 3,200. Okay, how did I do that again? 192,000 divided by 60. I'm recording it in the Contra Asset, and I know that I have to hit an expense, because all of these adjustments are recording amounts used up, and depreciation expense is the place we go to record the expense in the current period. Okay, so there's the 4 adjustments. So how do you do a worksheet? He gave us a trial balance. I put it in there in order to get us started for ease of time here. He gave us 4 adjustments. I dropped them in the adjustment column. The next step would be to ensure that your debits equal your credits before going on. Okay, even if you're brand new to Excel, you'll want to do this one formula with me at least. You want to sum this. So I'm going to type in equals SUM. I'm right down here at the bottom. Open up the parentheses on the number 9 key and highlight from the top to the bottom, making sure you capture everything in there, and press enter. And 48,000's in the debit column. And then the great thing about Excel is once you have that formula, we're going to drag it all the way to the end so that we don't have to do any more summations. There's lots of ways to copy in Excel, but probably the easiest one for us right now is when I move this to the corner, notice what happens to the cursor. This is what I call an active selector here. And you'll notice that if I move to the corner, it turns from a fat white cross into this skinny black cross. When you see that happen, left click, hold it down and drag it all the way across, all the way to the end. And that will calculate all the summations for you. That means you don't have to worry about summing those up anymore. That's the next step of the worksheet. So let me stop. See if you have any questions before we go do the horizontal math that the adjusted trial balance is going to have us do. Okay, once we see that our debits equal our credits, now we're ready to go on and do the horizontal math that the adjusted trial balance is going to require us to do. So eyes focused on the orange columns up here, and we're going to do horizontal math. And what that means is instead of having this trial balance that does not include adjustments, now we're going to create a trial balance that does include, in this case, the 4 adjustments they made. So cash didn't change, bring it over. Now you guys might be able to just type in 78,800, but I have a mild form of dyslexia, which means I'm highly likely to transpose numbers. So I'm going to let the computer grab it for me rather than subject you to having to wait for me to fix all these transposition errors. And accounts receivable didn't change. I'm just going to pull up that number. But when you get to supplies, it did change. Credits, all 3 of these here, make those assets go down. So you're going to subtract them out. So on supplies, on your calculator, 30,400 minus 18,400, that number should look familiar to you. They told us in letter A that the inventory of supplies was 12,000. Okay, well, we know we did that one correctly because that's exactly what our trial balance shows now, is that 12,000. And the prepaid advertising went down because we used some of it up. Do the horizontal math. When you subtract that out, you'll get 43,200. And our rent, prepaid rent, went down by 12,000. So when I subtract out 12,000, I get 132,000. Okay, let me stop. Any questions on those first 5 accounts? Notice, oh, go ahead. Did I hear a question? Notice that the concept of normal balances really helps now. We should not have anything on the credit balance side for any of our assets because we know that the normal balance of assets is the debit side. So one way you can catch your errors and not spend 2 hours pulling your hair out is to look at the normal balance and make sure that it's on the side that you expected. And I know I've had some furious students come in my office, or I've Zoomed with them. And, you know, I spent 2 hours. I have my boyfriend look at this. I can't find it. And they get so angry with literally sometimes within 2 seconds, without even looking at an answer book, I'll say, oh, it's here. How'd you do that? Because I know that all assets have a normal debit balance and you might have an asset on the credit side. I know that's the problem. And once you guys start getting more experience with practicing, you'll learn to discover those things really quick too. Okay, the cost of my equipment didn't change. And here's where you're most likely to make a mistake with this new account that we've learned about. That is a Contra Asset. It's a Contra Asset, which means it doesn't have the normal balance. It belongs on the credit side. So I'm going to put that 3,200 balance in. That catches my eye. What is this? It's an asset with a credit balance. Okay, my teacher reminded us that we have this new Contra Asset account called accumulated depreciation that will go up, 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 up every month until it's fully depreciated. Now I'm to my liability section. Okay, my liabilities didn't change, so I'm going to bring the liability over. My capital didn't change. I'm going to bring my capital over. And here's another contra account, right? We've learned that one in the past. So all of a sudden we're going down the credit side and we get this drawing thrown at us. The drawing is a contra equity account. It has a normal debit balance. So let me grab that. And now I'm to my revenues. My revenue did not get adjusted. I'll just carry it over. But we know that all of those adjustments affected an expense account. So here's the section that gets really busy with getting updated. We put a lot of expenses on the books. So advertising was 0 and we added 14,400 to it. There's my balance. And depreciation expense started with nothing and we added 3,200. There's my balance. Rent expense was 0. They paid their rent up front, it looked like, and 12,000 of it had been used up. So there's my rent expense. And my salaries expense didn't change, carry it over. My supplies expense did. It started with 0. We upped it for the amount of supplies used, which our author made us calculate. And then finally, this utilities expense didn't change. So here's where whatever you believe in. Some people get their lucky rabbit's foot and they hold it really tight before they sum up or manually add up the numbers. Some people say a prayer, some people cross their fingers. We're hoping that the debits equal the credits, because if they don't, you've messed up someplace. If the debits equaled the credits on the trial balance and the debits equaled the credits on the adjustment, there has to be a matching of debits and credits on the adjusted trial balance. And this is where that horizontal math, it's really easy to make a mistake. And that's why I'm begging you guys to try your homework earlier in the week with this holiday weekend coming up, so that you can Zoom with Sandra or Giselle during those alternative hours. Questions on that adjusted trial balance? Okay, well, now comes the point then, and here's what I would encourage you guys to do. If you want these titles to stay fixed so we can see what line we're going on, here's what I encourage you to do. Make sure that you could see these top lines in rows 8 and 9, and make sure that you can see the cash here. And then I would encourage you to freeze the panes. If you're not an Excel user, I'm going to show you how to do that. But otherwise, when you move the screen over, the cash goes away and you don't know what line you're on. So here's what you do. Put it in cell B10-ish, somewhere around there. And then go to the view screen, the view menu here. And you want to click freeze the panes right here. Freeze the panes. And now when I move, you'll see that the cash stays put. So if you need to do that one more time, put your cursor in cell B10, then go to the view tab and choose freeze panes. And then if you want to unfreeze it, you would click it again. All right, so I'm to this trial balance now. My last step is dropping the numbers either in the income statement. Let me hit my draw button. So my pencil will draw either on the income statement, and it's still having an issue. So I'll try it with the cursor. Either on the income statement, I must still be in a formula here. That and my cursor is going crazy. Let me try my pencil one more time. Okay, escape. Try the pencil. Don't care what color it is, leave it red. And it doesn't want to work for me. You know why? Because my panes are frozen. Okay, so let me use color then so that you guys can see this. On the income statement, you're only going to have revenues and expenses. So I'm going to put some color in here to help you see what's going on. I'm going to make the revenues and expenses blue, and they're going to be dropped in here. And by default, if it's not a revenue or expense, that's right, I can't write because of my thing being frozen. If it's not a revenue or expense, by default, it's going to be dropped on the balance sheet. And some of you, and maybe even this might have been part of Nada's question as well, some of you are going to say, wait a second, drawing doesn't go on the balance sheet. And you're right, it doesn't. But because we don't want to make this thing 12 columns long, because there's not a whole lot that goes on the statement of owner's equity, we're going to drop it on the balance sheet just for demonstration purposes. And you'll learn in the next chapter that we actually do close out drawing to capital. So here's the way I want you to remember it. The only thing that goes on the income statement are revenues and expenses. Maybe I'll type that in. The only thing on the income statement is revenues and expenses. That's it. Everything else by default is going to fall onto the balance sheet, onto the purple area here. So as I demonstrated to you in the last class, I don't expect my revenues to equal my expenses. So this will be the first challenge for us. Our debits will not originally equal our credits. Let's do it together. Here's my one revenue account. And if you get those dollar signs, you need to widen your columns a little bit. There you go. If you want to know how to widen, you can just go to the gray area up there and just make it a little bit bigger. And don't forget, Sandra is saving her files and she'll post them. And here's my expenses. I'm going to do a shortcut in the interest of time here and just grab that first one, just like I showed you how to copy across. Excel lets you copy down also. That's what our income statement looks like. You can manually carry each one over as well if you're not quite sure how to use Excel. I don't have equal totals. My hope as a business owner is my revenues are a whole lot higher than my expenses. Okay, and they are. Now I can tell the owner whether he or she was profitable or not, because I can take the difference between my revenues and expenses and put them in that yellow cell. Here's the revenues. When I subtract out the expenses, I get net income of $211,600. I put it on the side that has the lower amount. So I can now show that these two amounts are equal. When I sum these up, I'm going to show now that these two amounts are equal. However, because there's numbers everywhere, I'm not feeling 100% confident on this until I make sure that the balance sheet is off. This number's off by exactly the same amount. I won't know that until I drop these purple numbers in here in a moment. So let me stop. Any questions on the blue numbers that you see on the income statement? Any questions on how we got that 211,600? That's the difference between the revenues and expenses. In fact, I may just write that in here. Revenues less expenses. That's how we calculated the 211,600. So right now I haven't finished this up. I haven't ensured that my worksheet balances, but if I'm the owner, I'm feeling really good that in 1 month, I was able to generate over $200,000 worth of profit. So then what's left by default, if it's not a revenue or an expense, we're going to drop it into these purple balance sheet columns, being really careful on that contra account that you put it on the appropriate side, because this is the first time we've used it here. All right, let me bring cash over. Okay, and you guys can just type these in if you want. Let me bring accounts receivables over. That's an asset account. Let me bring supplies over. If you're an Excel user, you can do this really quickly, but I'm going to do it line item by line item. Let me bring these prepaids over. And that means that I need to widen my column to show the whole number. Let me bring my equipment over. And here's where my teacher told me I'm really likely to make a mistake because I've had all these assets in the debit column. And now suddenly I'm switching over because I have a Contra Asset account that is now sitting at 3,200. Let me finish this. Here's my accounts payable. Screen. Let me make sure that this cord is plugged in because it looks like it's losing power. Give me 1 second. That might be what happened. Did you guys hear my computer going? Okay, let me get rid of these error messages. Let's finish this off. My capital is coming over and my drawing is going to come over. Now the drawing is the one that's likely to throw you off for 2 reasons. It's a contra account, so it's going to be a debit balance, and you're used to putting drawing on the statement of owner's equity. It still goes there. Okay, it still goes on the statement of owner's equity. We are just keeping ourselves from having to add 2 more columns. So kind of as a temporary holding measure, those accounts are going to go on the balance sheet. Now, here comes a moment of truth. When I take the difference between these 2 amounts, which I'll put in red so you can see which amounts I'm talking about. Give me 1 second to change this to a red font. When I take the difference between those 2 red numbers, I better come up with this same amount. Otherwise, I've made a mistake someplace. So let me take the difference. And I did it the wrong way. Let me take the higher one plus the lower one. And if I did this right, that same amount that balanced out the income statement has to balance out the balance sheet. How will I know that I've done that? When I sum these columns up, these 2 have to balance. In other words, I have 498, 400 in this column. And when I foot these 2, I'll get the same thing in that last column. It's an internal document used to pull together all of the adjustment data and to give the owner a preview of whether he or she is profitable. I can tell the owner, look this over. Let's make sure we've adjusted our prepaids. Let's make sure we've adjusted our supplies. Let's make sure all of our fixed assets or plant assets are depreciated. And if we've done everything correctly, owner, you've had a really good month. You've generated over 200,000 in profit. This is not replacing the financial statements. We're still going to do formal financial statements. This just gives us an overall preview of where we're sitting before we actually go do those financial statements. You must have questions because that's a lot of numbers. Any number up there that you're unsure about? Okay, then if not, our next step is to do the formal financial statements. Okay, I think what I'm going to do is to keep from going back and forth again, I'm going to snip this and you guys can snip it with me, or I'll try and put it in the chat room. We'll see if that works. Let me just grab these amounts. Whoops, let me put them back over there. Let me see if my snip will allow me to just grab those columns. We'll see. I'm trying this with you. New. I'm going to grab the fees income along with those columns here, and I've snipped it. I'm going to save it so I can put it in the chat room. And I'm going to call this problem 44B. No, just 44B. I'll call it worksheet. I'm saving it in my pictures. I'm going to try and attempt to put it in the chat room so you guys can go download it. Give me 1 second. It's always iffy when you do this off the cuff here. There it is. You guys have it in the chat room. You can download it if you want and put it on your Excel spreadsheet so that we can now go in and create a set of financial statements. Okay, so I'm going to go to my financial statements, and I'm going to paste that snip that I just did. I'm going to make it a little bit smaller so I can see it. And now I'm ready at least to get my income statement done. So again, that worksheet is not a replacement for formal financial statements. It's in addition to, and I think I need to share my screen again. Questions, ask away. And let's see what happened to my spreadsheet. There we go. All right, we would put the who, the what, and the when. In the interest of time, I think I'll pass on the who. For the what, though, this is an income statement. And this is for the month ended, whatever your worksheet says. I guess I'll have to come over here and take a look at it anyways. Sandra, can you tell without looking, because I lost my other screen, what month is this for? On the previous tab, or anybody?
It's June.
Thank you.
Yeah.
June 30th. Okay, and then I wrote a note to you guys. A big mistake that I will see out of beginning accounting students, there are no debits and credits on financial statements. When you learned about the financial statement, you didn't even know what debits and credits were. There's two columns, which means totals on the right, details on the left. I only have one income account for $295,200. So I'm going to go ahead and put that over here because it would be silly to total up fees income when I only have one item called fees income. So let me back this up. I'm going to change my mind and move this down one. I'm going to first put in, this is my income statement, revenues. And then I'll put in my fees income here. If I had two or more revenue accounts, they'd go over here on the left and I'd total them up on the right. And then I'm going to put in expenses. And I'm trying to look at, you guys can see it on my screen here. I'm trying to look at my SNP, and I'm going to go ahead and put those in. I had advertising expense. I'll go ahead and use the order they gave them to me in. I had depreciation expense. I had rent expense. Sandra, you're going to have to watch me because I also lost my other screen that had the answer on it. I had salaries expense, supplies expense, and utilities expense. Now we could type these in and that will work because I can just see them on the screen. Or if you guys are Excel savvy, you can go grab that first number off your worksheet and just drag your cursor down. I won't try and do that here. We'll just make sure, Sandra can help me make sure that I don't transpose a number. In fact, I can really check myself because I know what my net income should be. My net income should be that same number we got on the worksheet. Let me get rid of that $sign. So let me total up my expenses by summing these up. You can actually see if this matches our worksheet, or in a moment I'll know because my net income better balance out to the same amount I got on the worksheet or I have a mess up someplace. So net income is always revenues less the expenses. Here's my expenses. 211,600. I think that balances to what we had on the worksheet. Dollar signs, you guys don't have to worry too much about dollar signs in Accounting 100, but because I want to model good habits, dollar signs go on the first line in each column and always on the last line. So it looks like this. And I know it's really hard for you to see the underline. So let me see if I can use my pencil here. There's a single and here's a double. That's the income statement. We told the owner that we think you're profitable, and now we've just proved to him or her, here's your financial statement. This is what we're going to be sending over to the bank to look at. They won't ever see our worksheet because remember, our worksheet is an internal document. It doesn't leave our premises. Okay, I ran out of time, so after Sandra posts her file, I will go post the statement of owner's equity. I do want to show you the new part of the balance sheet. So if anybody knows how to take a screenshot, let me see if I can get to my answer here. If anybody, once I get it up here, wants to take a screenshot of the balance sheet and put it in the chat room, that would be awesome. I'm trying to get it up here. Here's the balance sheet. I'm going to make it bigger for you to see. What I want to point out to you on the balance sheet here is this. This is the new calculation before we leave the classroom here. Remember what we said. GAAP says that you must show 3 things for depreciable assets. 3 things. You have to show the cost. Here's the equipment. It costs $192,000. You have to show the accumulated depreciation. We can tell it's a new asset because it only has a small amount of depreciation. And the resulting, this is what I want in your notes, the resulting book value is shown off to the side. It's not even given a label per se. It's just the difference between these two. That's the new part of the balance sheet. We're still showing on the balance sheet that assets equals liabilities plus equity. That's what it's all about. But we have a new way of displaying our fixed assets. So I can see that my accounting equation's in balance. There's the assets, and here's the liabilities and the equity. Then the very last step, which Johan might have brought up at the start of class, just because we're doing a worksheet doesn't get them into the accounting system. The last step would be to formally do these adjusting entries. And here's the 3 that or 4 that you saw me do on the worksheet itself. We got to get them into the accounting system. And the only way that we can do that is through the journal entry process. A lot of stuff, chapter 5, the level of difficulty kind of got cranked up a little bit, right up there with that chapter on debits and credits. So your job now is to go home and practice. We did that worksheet together. I also gave you guys one last time, an extra set of practice. So by the end of this weekend, you should be feeling really comfortable about doing 10-column worksheets. And the last thing I'll close with, because I've used up all our time, remember that I'm only giving you the minimum amount of homework that I think is necessary for you to master the material. There's nothing to keep you from going in and doing more worksheets until you develop that confidence that you need prior to the test. Sandra will be posting her files in the discussion link. Sandra has tutorial hours in the early part of the week, and I believe Giselle changed hers. I sent you guys out an announcement this morning. It is a holiday weekend. I'll still be reading email and we'll still be able to help you if you need it. But also don't forget to connect with your classmates, right? I can text all of you at one time, and so can you guys. Use Pronto. If you see that Johan's in class and Angel's in class, you guys might want to think about using Pronto to text them and say, hey, I'm getting ready to work on my homework shortly. Can I text you if I have any problems? That's a great communication tool. And I get group texts. If you guys want to send something to the whole class, I think one of your classmates did this weekend during the Super Bowl. Everybody's watching the Super Bowl, but I'm distracted. I can't sit still that long. So I was texting people back during the Super Bowl. So I'll continue to do that when I can. When I don't have a baby in my arms, I'll continue to do that. Any questions?
Yeah, Professor, when we're doing the journal entries after like the whole entire worksheet, do we just do it for the adjusted entries only, or for the whole entire balance sheet, I guess?
Yeah, just for the adjustments, because that's what this chapter's been about. That's the part that we haven't done yet. So
All right.
just for those 4 adjusting journal entries. In fact, let me put them up there for you, Johan, if you want to take a picture with your phone. Just these 4. Just these 4. We journalize them, and then we'd have to update the accounts through the posting process. Yep, some instructors don't allow you to take pictures. I've been reading some syllabi and they're like so against taking pictures or videos. feel free. Anytime I put something on the screen that you want to take a picture of, be my guest. Anybody else? Okay, guys, then I don't know if I mentioned to this class or it was my previous class. I'm going to check on my mom this weekend. She lives in Chula Vista. She has terrible internet there, but I will be checking my emails. The Zooming will be a little bit more limited. I have to leave her house to go find a Starbucks or a community place that has internet when I go check on her. So just be patient. When you send me something, I'll definitely get around to answering it, but it may not be with the same speed that I answer when I'm in my own house. Thanks for coming in, guys. Use each other as a resource as well. Thanks, Sandra.
Professor?
Appreciate you.
Professor?
Oh,
Thank you,
Nada.
Professor.
Yes, Nada. We said we were going to stick around. Do you want to share the screen where you were having trouble?
Yeah, let me share my screen.
Okay.
1 second.
Let me stop the recording though, so that you don't go with the rest of class, but I'll still be here.